Okay, well, welcome everyone. Thanks for joining us to this first online session from Hashdex Europe. Last year we had really good feedback on the educational series that we've done, and we wanted with Draman, our head of product here in Europe, to continue providing these insights and share further our views. So we will do an online series every month, and the topic will be very dependent on how the market evolve, if there are interesting things. So to start the year, obviously the biggest news has been the final approval of a US ETF on Bitcoin Spot. So we thought it was a good way and a good opportunity to discuss about what to expect next. So before starting the presentation, I will just read this traditional disclaimer saying that this webinar and its presentation are for informational purposes only. It is not an offer to buy or sell, nor it is a solicitation of an offer to buy or sell. So that being said, I have Draman with me. As I said, he's the head of product for US and for Europe. So he's been deeply involved into our Bitcoin ETF launch in the US. But maybe before starting talking about what to expect, I just want to give a quick review of what happened last year. We look at Bitcoin, but at Hashdex, we're very focused in crypto indices product. But since last year was a year of recovery, we like to look at Bitcoin. And things to note are the fact that last year, the Bitcoin was finally being seen as a potential store of value. We had two market scenarios where Bitcoin behaved like a store of value during the US bank crisis, or during the tension with long-term US govies. So it was very interesting to see Bitcoin dancing between its traditional super risky asset to being a potential store of value. The second big information about last year is that last year was transformative for the regulation. Regulation is coming in the US, in Europe. We have Mika here. We see the SEC progressing, and also the institutional are coming. So either companies are integrating these technologies to their processes, or if we look at traditional finance, they are testing a new process to, for example, issue bonds, do some settlements through blockchain network. But mostly, to me, the biggest news was clearly the fact that the big guys of BlackRock, Fidelity, and Co. Are joining companies like Hashdex to try, to come up with regulated and listed products to access the physical cryptos. Last point on this slide, the blue ones are when we started, to make some calls to our close clients. And we wanted to show the performance, of Bitcoin since this call. So the first one was in Q1 2023, where our research team came to the conclusion that we were out of the bear market and into a recovery cycle. We will detail this to you later, and I think we were right in that call. The second one during 2023 was our Lulapuzza effect research report, where basically we were looking with our model at the fair valuation of crypto assets, and the conclusion was that these assets are undervalued. The last call that we made is clearly during our crypto outlook, but because it was only in December, we are not showing any performance. I just mentioned it, institutional are coming, but also traditional companies are integrating these technologies into their process. So that was, just to give a very quick, look back around 2023. Keep in mind that you can, post your question on the Q&A. We will review them at the end of the presentation, and we try to do this in 30 minutes roughly. So now moving on to 2024, maybe Draman, can you introduce, the big themes of our crypto investment outlook?
Sure, Ben. So Raman Miti, I'm head of product at Hashdex. Thanks so much for everyone for joining us today. So I think for 2023 was a great year, not just because of the price performance, but it was a great year because there was a lot of advance being made on the regulatory front, right? So, you have MiCA in Europe. That was huge because thanks to MiCA, a lot of the institutional folks feel more comfortable having a crypto or blockchain strategy. And it was also a great thing because for the first time in more than 10 years, the SEC, after losing, some of the lawsuit against Grayscale or against Ripple, sort of realized that they had to come to crypto regulation, at least in a more rule-based manner, instead of regulating it as an exception. So it was a really, really great year from that perspective. And now we think 2024 would be in the continuation of that and would be a key inflection point for the asset class. And as you've seen, with the approval of the Bitcoin ETF in the US, we're really in the institutional phase of the asset class. So there's three key drivers, three key themes that will play out this year. One is crypto entering into what we call the ocean of TradFi. Because as many of you will know, crypto has been this very small niche sort of play where people like us, Ashlex, are very active. But we are small, and crypto total market cap is still 1.5 trillion compared to the hundreds of trillion that in fund management industry, and maybe 400 trillion or 500 trillion in global wealth. So crypto is just like a rounding error still. But we think now that with the regulatory clarity, with all these large institutional investors providing ETF, crypto is gonna enter into the ocean of traditional finance because more and more of the legacy players will support crypto products, which is a good thing, right? Because it means that it will be easily accessible to more people. And it also means that a lot of new money will come into the asset class and that will support the price action. So that's the first key thing. The second key thing is we'll also see the harnessing of technological advance. At the core, crypto rides on blockchain technology rail. It's a fantastic innovation. It's a fantastic technological development. And one of the things that makes us the most excited is, price goes up, price goes down. We continue to see all the technology development that is happening in this system, right? If you take smart contract platform, if you compare Ethereum 2 years ago to Ethereum right now is way more advanced, it's way more developed. It has way more decentralized application. It has way more decentralized finance stuff. It has way more scaling solution. Yet the price now is lower than what we've seen in the all-time high. So you think about it from a fundamental basis, it's like, you have a much more mature investment. You have a much more mature ecosystem. You have way more value built into it, yet it's cheaper than what it was like 2-3 years ago. So that's why we're thinking that the market has not reflected yet all this technological development that has happened because we were mostly in the bear market. And when people start realizing, when people start comparing adoption, utilization, all the fundamental metrics that you have for this crypto network, when they start comparing where we are today to where we were 2 years ago or 3 years ago, I think they fundamentally realized that, the price need to adjust to the level of maturity that we have today. And the last thing is crypto will benefit from the macro tailwind. I think for the first time in maybe 3 years or so, there's a lot of green lights for crypto. One is the approval of the Bitcoin ETF, which is great because, it removed the reputational risk and it also removed the regulatory risk that many large investors had with engaging with crypto. So it really increased the acceptance. The number two is also the market conditions are improving, and we'll touch on that later. Like if you look at the macro setup and the regulatory setup, there's way more clarity. So we think in balance, there's a lot of positive sign for crypto on the macro side. And that's a good bridge to talk about our view of crypto as a macro play. I think generally there's like 5 items. There's 5 key things that drive crypto when it's come to macro. One is that we think crypto assets are generally less sensitive to a recession than bond would be or than equity would be, for a very simple reason. It's because the demand for crypto is global. So crypto is probably the first asset class that is driven by global demand rather than, country specific or region specific demand. And because crypto is driven by global demand is, even if European or developed market have a recession, China, India, Brazil will tend to have, positive growth. So in fact, the global growth will be positive, which is good for crypto. The second thing that is constructive for crypto is the path of inflation. We're coming from a period of very high inflation, and we've certainly inflation has been coming down. And with the inflation coming down, we think that the monetary policy would also move from a tightening cycle to an easing cycle. And as central bank ease the monetary policy, that would bode well for risky asset. And crypto is usually one of the first assets to start going up when the money is cheaper and risk sentiment is going up again. And the last 2 points when it comes to crypto in the macro setup is the FX situation, because we think as the US dollar is largely overvalued because we've been in a risk of sort of sentiment, a lot of macro volatility and a lot of geopolitical volatility. So USD is overvalued, but as the USD sort of trades convert towards this long-term fair value, that will make crypto cheaper for people living in emerging market, or even for people living in New York for that matter, which would also create good entry point for folks trying to get a crypto allocation. And the last point is the macro and geopolitical volatility support crypto. What we've seen over the past 2 years with the Russia war in Ukraine is that, and with the reaction that came with it, is a lot of people, as there's more and more macro volatility, they think about crypto as a hedge to have in your portfolio, either because you want to safeguard your asset outside maybe US control or European control, so you want to put some of your asset in crypto, or because you just want an asset that you can move faster even as the world is getting more and more volatile. So we think the thesis of certain crypto assets, especially Bitcoin, as an emerging store of value, as a hedge against macro volatility and political volatility, is just going to become more and more mainstream. So we think generally the macro situation is very volatile, but on balance, it's favorable to crypto asset compared to the traditional finance asset classes.
All right. Now let's talk a bit about the US ETF. So what to expect with it? Maybe I'm going to give few words, and please complement Draman on that. But I like to remind to investor that before doing, you need to be able to do. Okay. And I think until these products were launched, because of the fact that they are listed, that they are easily accessible, that they have secondary liquidity, until these launches, many investors were not able to access to the crypto universe through Bitcoin. So I think, now we have the first step. Okay. Now we have a lot of financial advisors, some direct retail who don't have, the knowledge to go to the crypto exchanges and take care of self-custody, or maybe pension fund, that type of investor today can easily access the asset class. And we are talking about a huge amount of capital that could come to the asset class. So that's the first element. When people will do, let's see, obviously, the more education, the more understanding of the asset class, the more understanding that crypto should be part, of a multi-asset portfolio, then, the more inflow we should see from that part of the world. I also like to remind that, obviously, Bitcoin for crypto native people can be easy to access and custody, right? But for the normal people, it's not really. And I think the comparison with gold is pretty interesting, because thanks to the this paper gold, right? Thanks to ETF or ETPs in Europe, we've seen a much more investor being able to trade gold, and this has been clearly a great support of prices over the last 10 to 15 years. So will this be replicated with Bitcoin? Maybe we think a part of that will impact Bitcoin over the long run. And maybe the last one from me is, we've seen a lot of skepticism from the US regulator, but they're pragmatic. Okay, they understand that this is real, this is here to stay, and that they should rather offer secured and efficient envelope and products to investors rather than maybe leaving them into the crypto Far West. So for us, it's a great sign. It reinforces our positioning. And clearly, this is one of the biggest, potential driver for crypto this year. I'm going to move on. So about the cycle. As we said, it's been now almost a year that we say that we are in a recovery cycle. It seems that we were right. Obviously, past performances are not a reliable indicator of future performance. However, Bitcoin is always evolving in these three cycles: bull, bear, and then recovery. Keep in mind that the recovery cycle are the longest, and that usually bull run are pretty rapid. So that's why, since we are in this recovery cycle, we indicate to our investor that we believe that the entry point for Bitcoin and the asset class as a whole is very interesting. Maybe moving on to the halving. So Raman, if you can maybe remind us what this word means and what could it mean for the supply demand of Bitcoin.
No, sure, Ben. So I think this is last year was great from a price performance standpoint. I would think that we are in the middle of the recovery cycle, and it's really trying to figure out what's the best entry point. And one of the entry point that I've worked very well in the past is the Bitcoin halving. So basically, the halving is the phenomenon, or is a rule. It's really a rule in Bitcoin, in the Bitcoin ecosystem, where every 4 years or so, the inflation rate, i.e. the number of Bitcoin that get issued, is divided by 2. So, if you think about it, take a step back, you have a setup where you have a setup where you have a setup where the demand is still driven by all the things that you mentioned before: no ETF approval, and no ETF approval, no capital coming into the asset class. So demand, you're only going to see more and more new drivers of demand, right? And that could be huge. Like, I think in the best year so far, crypto ETFs have got 10 billion in net new money. But in the previous start from Ben, you see that certain analysts are estimating that there could be net new money of 50 billion coming into ETFs. So think about it, actually 5x the best years that we've seen. And on the supply side, the Bitcoin supply will be divided by 2 by, starting in two months from now. So this is a strong positive development for the price, where lower supply and higher demand, that should bode well for price. And historically, Bitcoin halving have been one of the best trade that you could do. And this chart just shows that, like, if they look at the performance of buying Bitcoin up to 500 days after the halving. So in 2012, that was super, super early. All wish we'd done that trade. If we'd invested by the time of the halving, right, you would have made 28x your investment 500 days after the halving. If you'd done the same trade in 2016, would have been 11x your money. If you've done the same trade in 2020, that was like, I want to say yesterday, you would have done almost 400%. So it's sort of, we believe that the market is undervalued. We believe that there's going to be circular drivers of price performance for Bitcoin. And this is one of the best ways of, as an entry point, you could time the halving and try to get into it while we are still in the recovery phase and right before the halving as well. Then we can move on to the next slide. Exactly. And I think, and structurally, it's really that we still on the lower end of the price or the valuation for the crypto assets, right? I think, there's few ways to look at it. You can compare where we are today compared to the all-time highs as of, October or November 2021. But, based on some of the internal model that we built, that look at the history of this asset, and you see that we really very much at the lower bound of what our valuation model would suggest. And one thing that you could also notice, and it's very similar to the graph on the Bitcoin cycle is, you see the prices goes up and down. So they will trade on the lower hand of it for a little while, and then the recovery and the bull market will happen. So we think, we are at the lower end of this range, but we think again, that's good. That's a good entry point for the trade, because from a risk reward standpoint, prices can always go down. It's crypto, obviously, while the downside is a little bit capped, and you have a lot of upside. Even if Bitcoin were to just capture the previous all-time high, you have almost a 50% upside potential if we were to go back to the all-time high, and even more, because as you might have seen, certain market analysts are putting price target in the 100,000 or 200,000 out there for Bitcoin for 2024. Then on the next slide, please. And yeah, and it's still very early, right? And that's one of the ways to think about it. I think we have a lot of conversation with clients which are like, hey, it's crypto. It's like, how do we evaluate it? It's almost like, it's like internet in the early days. We know that the asset class is new. It's in the early stage. Most of the useful things for crypto will be built afterwards. So when you look at the curve of crypto versus the other asset classes, it's basically, if you are comparing it to internet, you'll be in year 1998 of internet. It means that it's only now that Tencent, Google, and PayPal are being created, basically. Think about it, like how useful internet was then. I think back at that time, there's like probably very simple use cases that we were doing with internet. It was sending and receiving emails, and maybe going on the chatbot and writing thread online and stuff like that. So most of the things that we like internet for today were not created yet. Like we didn't have like any Google, we didn't have like PayPal, we didn't have like Alibaba, right? And that's just a way for you to sort of realize how early we are. But even still then, like you wish you'd invested in internet at that point in time. And that's very similar to what crypto is today, in the sense of, we know that crypto blockchain as a technology could power the internet of value, right? A decentralized way of trading value. But some of the best use cases are still to be built. But what we've seen so far is Bitcoin works very well. Ethereum and all the smart contract platforms work very well. And there's more and more decentralized application being built. So these are not to the scale that we think they can reach, but they've been built enough for us to have a sense for like, what's the potential of this technology. And that's a trade here, because Bitcoin is very small in terms of market capitalization compared to the other asset class. And one of the ways of thinking about the potential growth is, let's say Bitcoin is at 800 billion in market cap. What if Bitcoin is able to capture just 10% of the gold market cap? Even if Bitcoin captures just 10% of the gold market cap, it's about 100% growth potential, essentially. So that's one way to think about it. But crypto goes beyond gold. Crypto is part of the crypto use cases, is also about technology, right? So what if crypto capture 20% of the market cap of like a Google or an Amazon, right? So that's one of the ways you can think about the value that could have crypto, because of the time. Crypto will steal market share from gold, will steal market share from payment companies such as Visa, because crypto is a way more efficient way of sending money, and crypto would also steal market share from technology companies, because we can build better technology ecosystem using crypto rather than a traditional a traditional alternative. So I think, yeah, we can close on this now. So we think there's like three key things before we open up for question. One is crypto continues to be undervalued, and we see it at many level in terms of the historical price compared to the all-time high, but also based on what is implied in the fair value model that we have and the valuation model that we have internally. And we're happy to have a session on valuation model. And we think that with the development that we're seeing this year, it's the development that we're seeing this year will provide a great entry point for crypto investors, especially with the ongoing institutionalization of the asset class that we're seeing with ETF issued by large asset management company. And over time, all of this will just create less all of this will create more and more institutional adoption for the asset class. And the third point is really, we will see a demand shock in 2024 because you have billions, trillions of dollars sitting on the sideline that could not invest in crypto before, but now you have ETF in the US from some of the largest asset management companies. You have way more and more product innovation in Europe, because in Europe you can do indices, so people can create way more interesting investment solution in Europe compared to what we had before. So we think there's gonna be more product innovation, and that product innovation would lead to more money coming into the asset class. So our thesis for crypto is as strong as ever, and this is probably one of the best time to get into the asset class. So I will stop here to see if you have any question from the audience. And any question from anybody? Okay, I see one question. Okay, what indices do we track? So basically, in Europe we have two main products. We have our flagship strategy is the Nasdaq Crypto Index strategy, so which is the broad market cap strategy. So basically, we work with Nasdaq to build probably one of the first and the most comprehensive index for the crypto universe. So it's a market cap weighted with quarterly rebalancing that aim to give you an exposure to crypto as an asset class. So I mean, you know, a lot of crypto investment is just buying Bitcoin, buying Ethereum, but we think buying Bitcoin, buying Ethereum doesn't give you exposure to the whole asset class. So what you want to do, if you want to get exposure to the asset classes, what you do when you want to get exposure to French equity, you buy CAC 40, right? You want to get exposure to US equity, you buy S&P 500. So we're building the S&P 500 of crypto, and that's the Nasdaq Crypto Index. So it's an index created by Nasdaq, which is dynamic, i.e. the number of constituents goes up and down with the market. And what we've done is we created eligibility criteria that enable the index to sort of filter out the risky assets, essentially, and the less mature assets. So to be eligible to the index, you have to be listed on core custodian, regulated custodian, and regulated exchanges, and you have to have a minimum liquidity in terms of trading volume. So basically, we created a product with Nasdaq, and the Nasdaq Crypto Index family is the largest crypto basket ETF in the world. So it's a very scale and sizable product that enables you to just invest through one ISIN in the broad crypto market. On top of that, we also built a smart beta strategy that is the momentum strategy, the HashDex Momentum Crypto Factor ETP, that essentially take a basket of the 12 largest crypto ETPs in Europe, and the weighting is based on the momentum, i.e. based on the price performance of that we've seen over the last 2 months or so. But to avoid the index being over allocated to small coins, we also add a risk parity filter on top of that. So these are the two ways to express a trade in crypto. Either the Nasdaq Crypto Index, that would be a broad market cap with about 90% weighting to Bitcoin and Ethereum, but that's really what the market is. Or if you want to be a more tactical investor, you could invest in a momentum strategy. I think usually the client think about the Nasdaq Crypto Index as the core allocation, where they would have more of the crypto exposure. And when they have a strong view about the market might be going up, I need to do a risk on trade, some of them will allocate a smaller part of their portfolio to the momentum strategy. So this would be the two strategies that we have in Europe so far. So any other question? I don't think we do. So thank you so much for everyone for attending. It was great pleasure to host you today. And as Ben said, this will be like a monthly call, and we're looking forward to having you next month. If you have any question, email us, and we're always happy to jump on the call to talk more about crypto investing, and all the new development that we're seeing from a product standpoint. Thank you, and see you next month. Bye-bye.